The U.S. economy grew 2.4% in the second quarter, which was above the first quarter GDP growth of 2% and far stronger than market expectations of 1.8%. The data came in as a surprise for economists who had been expecting a recession based on the recent Fed interest rate hikes, tech companies' employee layoffs, and the bank failures from the first half of the year. Fortunately, however, the layoffs were mostly contained in other industries, the banking crisis didn't spread, and even the house market began to stabilize. T-Mobile announced second quarter earnings with EPS of $1.86, beating the consensus estimate of $1.7, and revenue of $19.2 billion, missing the analyst expectation of $19.42 billion. Though the company failed to increase its total revenue, it lowered its operating expenses around 23% from the second quarter of 2022. The company raised its full 2023 year guidance to 5.6 to 5.9 million net customer additions from prior guidance of 5.3 to 5.7 million. Intel jumped in after-hours trading yesterday after also reporting second quarter earnings, showing a return to profitability after 2 straight quarters of losses. The company's profit came in at 13 cents per share versus the consensus estimate of a 3-cent loss per share, while revenue came in at $12.9 billion versus the expectation of $12.13 billion. The company also issued a stronger than expected forecast for the third quarter. Intel's finance chief stated that the positive report comes from the company's cost cuts for the year that amounted to $3 billion. AstraZeneca's second quarter financials came in today with an adjusted profit of $2.15 per share, beating the expectation of $1.98. Total revenue came in at $11.4 billion, also exceeding the $10.97 billion consensus estimate. The beat was due to strong performance of the drug maker's blockbuster cancer drugs that helped offset the loss of COVID-19 vaccine sales. Although the company enjoyed a positive quarter, it still expects sales to decline significantly in the full year. ExxonMobil reported second quarter EPS of $1.94, below the analyst estimate of $2.04. The revenue for the quarter came in at $82.91 billion versus the consensus estimate of $82.8 billion. The CEO of the company emphasized that the company tried to improve their underlying profitability in the past quarter. Capital and exploration expenditures of $12.5 billion for the first half are in line with the company guidance of $23 to $25 billion for the full year. As Phillip Capital team, we wish you a happy weekend.